It's about that time of day again. My name is Joseph. Tuesday evening, March the 6th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Starting off tonight on oil, crude oil is bullish, but trading inside a range ahead of tomorrow's weekly inventory report. So the plan is to focus on failures using key reversal lines for buying opportunities tomorrow morning. The S&P is bullish and trading sideways, the triangle pattern tonight, and got a key level of resistance just a bit overhead, and that tells me to wait for a successful breakout pullback before buying new highs tomorrow morning. Nasdaq is bullish with a big spike in range pattern. That tells me to avoid buying the high and focus on failures down below lows of that range for tomorrow. Gold is also bullish and trading at the high of a channel tonight, telling me to stay patient and wait for more reliable buying opportunities down to lows tomorrow morning. And wrapping up tonight on the euro, euro is bullish with a spike and range pattern of its own, and that tells me to focus on failures down below the low of the range tomorrow morning. Boy, I got a great newsletter in store for you guys and gals tonight. We got some big news setting up for tomorrow's Wednesday session. We got some strong trends, and we got some trading ranges to work our way around for tomorrow. I got a great plan. I'm going to put the plan together in 2.5 seconds here. But before we jump into charts tonight, I want to remind you, if you're watching us on YouTube this evening, you can find a detailed description of this strategy on my blog at sidewaysmarkets.com. I'll put a link in the description of the video. If you have any questions about anything covered in the video tonight, any terminology or strategy questions, please remember to post those in the comments section below the YouTube video. And if you really want to see everything that we do here at School of Trade, right, I'll put a link in the description. Head over here to sidewaysmarkets.com, and while you're here, make sure you join our mailing list. That way you'll never miss another minute here at SOT. Anytime we publish something new, I'll shoot you an email. That way you're always notified. And while you're here, don't forget, follow me on social media, lower left-hand corner. I'm always posting exclusive content throughout the week that you won't find anywhere else. Charts, links, updates, all kinds of useful information. So make sure you guys follow me on social, lower left-hand corner. And then speaking of charts, how easy is this? All the charts from tonight's video, you can have them on your computer for tomorrow. Grab those charts. There's a link right below the video here tonight on the blog at Sideways Markets. And speaking of tomorrow's session, make sure you grab that free pass in the upper right-hand corner. Grab that free pass. If you're not a member here at School of Trade, I got a free pass waiting for you to come out and join us in the trade room as a guest, so you can learn more about the who, what, where, when, and why. All right? So don't forget, join the mailing list. Grab those charts for tomorrow. Grab that free pass for tomorrow. If you have any questions, post those questions in the comment section below YouTube, right? Or I'm always here to help you guys out on live support. If you have any questions on the way, hit me up on live support on the right-hand side of that website. All right, let's jump right in. Tomorrow is a Wednesday session. Of course, Wednesday, March the 7th. We are cruising our way through this first full week of the month of March. Tomorrow, what do we have on the schedule here? Well, we got the ADP employment number tomorrow at 8:15 Eastern time. You're probably not going to see too much of a mover off of that, because that is usually leading up to Friday's non-farm payroll number. So we don't expect to see too much out of that number tomorrow morning at 8:15, so don't get too excited about that. It sounds like a big, nasty news number, but as you can see, it's only a green star news report, so we don't expect to get much movement out of that at 8:15 tomorrow. I would imagine, though, the big news tomorrow, right, 8:30, we got international trade. That's going to be a market-moving event tomorrow. We get the petroleum status report, right, at 10:30. And then the beige book, I'll tell you, the beige book is a little bit hit or miss. Oftentimes, the beige book has more of a negative impact on the last few drops of the morning session, other than moving things around in the afternoon session. So international trade, 8:30 tomorrow morning. Petroleum status report at 10:30 tomorrow, right, for all you crude oil traders out there tomorrow, right? And of course, we get the beige book at 2 o'clock Eastern time. The beige book definitely tells me, be aware that as we start going into the lunchtime session tomorrow morning, 11:15, 11:30, 11:45, just don't be surprised if we really slow down tomorrow morning ahead of that big news tomorrow afternoon. And again, it's always kind of hit or miss. A lot of times the beige book will slow things down ahead of that, right, that afternoon afternoon session, and then it doesn't really respond very much. So I wouldn't expect to see too much of a reaction to the beige book, but I would expect to see a little bit of a slowdown, anticipating that anything could happen when that news number comes out at 2 o'clock Eastern time. So really the big news tomorrow, I'll get that inventory report for crude oil traders, which we'll talk about in a moment, and of course, right, the international trade number for pretty much everybody. At the same time, I also want to remind you too, we do have rollover coming on the E-minis. We'll see if we get that this week. I'll be watching that closely. We're nowhere even near rollover here at this point on the E-minis. And then going into the end of the week here, we got that big employment number on Friday morning. So you'll hear me talking more about that in tomorrow night's newsletter. So for tomorrow, though, right, crude oil traders, you guys have that big news number at 10:30, so be aware of that. And, of course, for everybody else, right, international trade, they're at 8:30 Eastern time. Looking good, looking good. Let's jump into our charts here, and let's see what we have on the schedule here setting up for tomorrow. I'm going to go crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. Starting off with oil, the Texas tea, the black gold. The crude oil is bullish with a bull channel and a short-term trading range just below this measured move resistance level waiting overhead. The bulls obviously have control of this market right now, but it's easy to see this measured move. It must be intimidating them, right? It must be some sort of intimidation factor because the buyers are clearly not interested, right, in buying into that measured move. It looks more like a range up here, so anytime I see a trading range, my plan is to use the 2-try rule down below that trading range. That's where that battle zone comes in handy for tomorrow. It's also important to remember that tomorrow is inventory day. Every Wednesday we get the weekly inventory report at 10:30 a.m., which almost always gives us a few head fakes and a few reversals leading into that news tomorrow. So don't be surprised if by the time we come in tomorrow morning at 8 o'clock Eastern time, this market is running lower because, again, tomorrow is the weekly inventory report and a lot of crazy things happen leading up to that weekly inventory report. The good news, and one of the big reasons why I love trading crude oil, is because really this is only one news event per week you have to watch if you're trading oil, and that is tomorrow morning at 10:30 a.m. All the other news events, they really don't affect us too badly, but that weekly inventory report, it really gets nasty. So most important thing for tomorrow, I think, is just keep your eye on the time. You get that number at 10:30. I always recommend on Wednesday mornings to make sure you really watch closely after 10 a.m. Eastern time. In fact, my official cutoff on Wednesday mornings is 10:15 Eastern time. Had that 10:30 news event, and then after that news comes out, we can look and see how the market reacts and then trade from there. Most important things in the chart tonight, not a lot has changed from last night's newsletter. We had this, of course, strong, right, bull channel going higher, ended up coming off the high of that channel, right, and of course we have this, right, falling resistance trend line right now. That falling resistance trend line pretty much gave the buyers the only chance, right, to be a buyer was off of that pullback, right? So that was pretty much the only real shot those buyers had this morning, coming off of that low of the hidden of that channel. Well, you'll notice they didn't do a very good job of getting back to retest the high, and that's what leads me now into this trading range. Now we got a couple of these on the charts tonight. You're going to see a lot of this. So we got crude oil with the trading range, S&P, Nasdaq with the range. So we're going to be seeing more of that here tonight. Euro may also be a little bit of a range bond market as well for tomorrow. The bottom line, though, is we can definitely see the buyers. They had their shot. I'll put that trend line on here again, right? They had their shot, right, to be a buyer there earlier on, in the session, right? They were unable to get that retest of the high. So that leads me now into this conclusion. We are bullish, but as you can see here, it looks like we are now going sideways. Anytime we have a sideways range, anytime we have a trading range where we're seeing double tops, double bottoms, flat moving average, the personality usually feels a little bit confused. It doesn't feel as certain, right, as for example, when it was rising higher yesterday, or like a market like gold this morning felt very, very certain, right, of it going higher. So when I see this, kind of lazy movement, this lack of a retest of that high, chances are this tells me that buyers are rejecting the idea of buying high right now. And so the next step is we'll look for a 2-try rule. We'll look for this price to go down, try to get those sellers to try to get roped into this and try to buy into their failure. So that's pretty much my goal here right now. I have obviously a measured move up here. That measured move is it's kind of weird, right? Because it hit the measured move once, it never really came back to hit it again. It makes you think that what the real important factor is that trading range. So we'll definitely use that as the big clue here for tomorrow. Looking at the reversal line here at 61.97, that level still has not been tested yet. We talked about that last night on the newsletter. So I'm definitely looking for a 1 try, 2 try, back up into that range, right? Use that 2 try rule, use those sellers, right, and their failures to our advantage. When you start seeing the buyers unable to retest the high, what happens is you start seeing the opposite side of the market start to try to predict reversals. So we expect them to try to go lower. And when they do try to go lower, if they can't hold that pullback, right, that's going to be our sign. Look for that 2 try rule, 1 try, 2 try, right, and then back up into that range, right, for that buying opportunity going for tomorrow. The hard part here tomorrow is going to be if price goes higher, right? Price goes lower, it's pretty easy. Strong move down, moving average comes over, bears try to sell the pullback to the moving average because they're trying to reverse the trend, right? And they might be successful. We'll talk about that in a moment, right? We then see the failure into strength, strength into pullback, and pullback, of course, back up to retest the high, right? So failure, pullback, those are easy patterns we look for, right? Again, we mentioned an example of this, right, last night on the newsletter: failure, strength, pullback, right, and rocket higher. So that's a very similar situation we're looking for here, right, as we pull back. If we go higher, this is where things become a lot more difficult, right? We have the overhead resistance is that measured move. Although we haven't seen it react very well right now, we do need to make sure we don't forget about that measured move up there. And then, of course, we got the high of day up there, which will be the objective. So what you really want to see here is a strong enough move higher to be able to get in, to use this as a level of support without buying into that high of day. It's either going to be that, or we've got to go blasting higher here, get through that high of day with enough strength to give us the confidence, right, that we're looking for more, right? Because if this thing just kind of pokes its head up here, you got to be careful, right? Because you got that measured move going higher here. So you really want to see a real strong move up, real strong move up, get that moving average up at least above that measured move, and then look for that 2-legged pullback. Use that level of resistance as support and look to continue it up from there. The key is going to be extreme strength going higher. That's going to be the name of the game tomorrow if it goes higher, because, for example, right, we saw a nice run higher here, and you'll notice, right, they just backed right off of it. So we're going to have to see them really show us some real strong move higher, and then we can go looking, right, to buy that pullback from there. So that covers the up. That covers the down. If it goes sideways, well, we're pretty much already trading sideways. We got that covered already. How do we reverse? Again, it would be wise to keep your mind open, your eyes open for a reversal tomorrow, because we do have that weekly inventory report, right? Obviously, we have the potential now for this price, right, to run lower. But what do we take? What does it take for a reversal? It takes 3 things, right? Strength, pullback, strength, right? So strong move down. That strong move down isn't going to be enough, right? Because, again, we may see it come right back to that moving average, fail off the moving average, then blast right back up, right? Buyers will be looking for that tomorrow morning. If we do see, though, those sellers, right, they come out and they really run this sucker lower here, okay, I would recommend you don't chase after that move lower, because you never quite know how far it will go. It's oftentimes very jumpy, very illiquid, and it's difficult to get a good fill on it, and it is the definition of selling low. What I would recommend, rather than selling low, let's see if we can't attach those 2 lows, bring it back up to that high, and then look for that kind of hidden channel up here, right, up around this level of resistance. Usually somewhere between the top of that channel, right, and the low of that first leg, that will usually be where you get your best selling opportunity. And as you can guess, that target is back down to that big round number, which is also right the low of not Monday, but last Friday's low, right? Last Friday, just a tick or two above that big round number of 60. So we got some big news tomorrow morning. Keep your eyes open after 10 o'clock for that slowdown ahead of that news number. And again, 2 try rule right now, right, as we battle through a bit of a range-bound market. From one range to another range, a little bit different look to a range, but I definitely think it is pretty much the same same structure. S&P now is bullish, but trading sideways with a triangle just a few ticks below this measured move resistance level, right, waiting overhead. Now this, you can see this measured move definitely had an impact in what happened today. The buyers definitely have control. This is not a bear market yet, but I don't want to mess with this major resistance at the measured move. So I basically have two options. I can either buy with a two-legged pullback, right, down to the lows of the range, or I can buy with a successful breakout pullback to new highs above the range, right, tomorrow. Now, I talked about this last night briefly on last night's newsletter, right? We go up into a trading range like this, as soon as we stop making those higher highs, right? As soon as we stop seeing those higher highs, in other words, as soon as we start seeing double tops at the highs, this is not a reversal, right? This is not a selling opportunity now. This is just a timeout, right? Because the buyers are rejecting, right? The buyers are rejecting the idea, right, of new highs. So when you get this situation, you're basically looking for buying opportunities either here or here. And what will happen is it will oftentimes pull back, try once, try twice. That will be what we call the two-try rule, right? And these always take on, kind of different looks, right? Sometimes it goes one try and two try and then back up, right? Sometimes it just comes down, right, and goes one try, two try, and then back up. It's always going to be different. You're never going to have, kind of the picture-perfect textbook examples, right? A mentor of mine told me a long time ago that textbook examples only happen in textbooks. So you've got to be ready for a little bit of, kind of just different variations of that pattern. But one try, two try, right? Two try rule going lower and then back up into that range. And then don't forget, you want to get that real strong break through the high, and then that two-legged pullback, right? I'll use that two-legged pullback in combination with the moving average, right? Again, the key word is going to be strength, right? Extreme strength going higher there, because that strength going higher, that's going to be necessary to really intimidate all the sellers who are going to try to sell the high of that trading range. So those are basically the ultimate plan here, right, for us tomorrow, right? So as we look at this, we got the triangle, right? Lower highs, higher lows, moving average pretty flat, right? So we're going to stay away from the middle, right? Stay away from that middle, buy low, and of course sell high. Now this, as a trading range, has a bull bias to it. So I'm going to focus on buying low, and if it does break higher, which is definitely possible here, right? If it does break higher, then we can start looking at this, right, as a successful breakout pullback. So the key to a good triangle is look for the edges, right? Look for the edges. For the most part, the edges are down, right, down there, right? So what I want to see that one try, two try, back up we go, right? Look for that buying opportunity coming off of that low. Hopefully we can use the battle zone. I have, as I mentioned last night, same thing, right? That 96.10, that reversal line's waiting there. We get that, right, that first pullback there. So the battle zone is a really, really great spot for it. One try, two try, right, and then back up in. Again, just make sure you get below the range. Right, what will happen is the market will run lower, right? That moving average will come over. The bears will try to sell that pullback, right? And once they fail your strength pullback, right? Back up, right, into that range. The key is I'm not trying to buy this first leg lower, because it's very difficult to know which of these legs is going to fail. Right? Don't get me wrong, sometimes we get that rare occasion where it goes down then straight back up, right? But typically though, it'll do something like this, strong move down, pull back, try to go lower, right? And then blammo, right? Blast off back up to retest that high. So that's the plan, looking down in that low. One try, two try, right? And then back up from there. As we go higher, right? If we go higher, obviously if we get stuck here, if we go sideways, I don't want to do much with this. If we try to go higher here though, this is where things really have to be explosive, because as I look at the chart, right, all of a sudden now, right, we start realizing that as we're going sideways, right, buyers are rejecting the idea of going higher, right? So clearly the buyers need either some news events tomorrow morning or a political announcement overnight. Something needs to happen that changes the opinion of value for these buyers, right? The buyers at this point now, they definitely have control, but they're, for whatever reason, they're not quite convinced that there's going to be value buying up at these highs. So what I really want to see is, I want to see that strong move up, real strong jump up, right, and try to hold that pullback. I really want to try to use that high combined with that channel low. That will really be, right, a really good spot there for us. Now also we may see something like a spike in channel or a hidden channel here, right? We see a big jump up, right, attack those highs, up to those, right, up to that low, right, and then look for that as the buy tomorrow morning as well, right? So if we do see it jump, right, if it just runs higher here, right, grab that high, look for that, right, that hidden channel, and that will also be a reliable level of support, right, to use there for tomorrow as well. So pretty easy. We just got to get some strength, right? Got to get some strength. We have to see enough proof to get everybody on board, right, to be a buyer. Now, we got if price goes lower. We know the plan if price goes higher. We got the plan for price going sideways. How do we reverse tomorrow? What would a reversal look like tomorrow? Three things, right? Strength, pullback, strength. You can see here they got a good opportunity here to reverse it. Strength, pullback, yeah, but they didn't get the strength follow through, did they? So that's going to be the key here going lower, right? Strong move down, hold the pullback, and run. Trust me. When they hold that pullback, if these bears take control, you're going to know. It's going to be obvious, right? It'll be just about as obvious as the bulls running higher, right, in yesterday's session. So don't try to predict it. I never recommend trying to predict reversals because you're going against the momentum of the market. You know, it's like trying to swim against the current, right, in a river. It's exhausting, and most of the time, whatever ground you can make up, you're going to get dragged back down anyways, right? So I would recommend against trying to predict reversals. There are certain times when you can kind of smell a reversal. You know, we call it kind of being boxed in. We talked about that last week on the newsletter. But again, you still want to wait for that proof. So if I do get that proof going lower, then I'll go looking for that new hidden channel, right? And as I mentioned earlier, as you can see, it's the same strategy. It's a different market, right? It's somewhere between that high of the channel, right, and the reversal line, we should get the opportunity there, right, to be a seller. If the bears can take control here, right, there's a big juicy target waiting down around that 26.63 tomorrow. But again, that's a little bit of putting the cart before the horse. We've got to see those bears take control here tomorrow before we can have any option, right, to be a seller. Let's keep going here. Let's keep going from the S&P over to the Nasdaq now. Nasdaq also in a very similar situation we saw on the ES. We're bullish on the NQ. Got a spike in range here, just inches below that measured move level of resistance. The buyers clearly have control, but it's obvious they're struggling to push through this measured move. So the plan is to look for buying opportunities below the range or wait for a successful breakout pullback to new highs tomorrow morning. This is going to sound a little bit like a broken record here on the NASDAQ because it's pretty much the exact same plan of attack. We have that beautiful hidden channel we talked about from last night's newsletter, right? And you can see everybody was waiting for that here tomorrow, right here this morning. A good example, by the way, right? Last night on the newsletter, all we had was this much information. Right? So if you're wondering, how do you draw that? Well, again, you're trying to basically pin this from the high up to the highest point, and then bring it down to that lowest point, right? Drag it down. That gives you, right, that hidden channel there. Bottom line is you can definitely see that two-legged pullback down to that level of support. You can see those sellers, they tried to hold that pullback. When they failed, all the buyers piled on, but notice what they didn't do. They didn't retest the high. That was their mission, right? That was their objective for last night's or this morning's pullback, was to go back and retest the high. Instead, this measured move, as you can see, it's a very large multi-day measured move. This measured move you can see here just continues, right, to stand in their way. We have lower highs. We have higher lows, flat moving average. This, of course, just feels like a trading range, right? It's a bull bias. The buyers have control going into that trading range. So it's very similar to what we talked about, right, on the S&P. Focus on those edges. Focus on those edges. That will usually be where, right, the most amount of trading opportunities are going to come. If we put this on to that high, right, I can, of course, grab this off the high real quickly there. Yep, that looks good. Nice and easy there. And of course, I want to make sure I'm either going one try, two try, right? Two try rule down below the low of that triangle. I'd really like to, at the very least, incorporate this 71 3/4 area, right? So one try, two try, and then back up into that range from there. If we stay sideways here, obviously I'm not going to touch this. It's too bullish to be a seller, right? It's too high to be a buyer, so I can't do much there. And then again, if we do see that strong break higher here, right? If we do see that strong break higher here, the key word is going to be strong, right? So look for that strength going higher. Grab that kind of hidden channel there, right? And then try to use that hidden channel, right, combined with that moving average, get the moving average up, right? That will all get us in a good spot there to be a buyer. And of course, that big round number is still waiting up there to be tested, right, for that Nasdaq here tomorrow. Last but not least, how do we turn bearish? Yeah, strength, pullback, strength, right? So strength, pullback, strength, find that new hidden channel, right? Grab that sell off the high, right? And everyone's happy. Again, just be very careful trying to predict that reversal, because a lot of times we see real strong moves down, right? We see real strong moves down, but we pull back to the moving average, all that strength's gone, right? And the market sucks right back up in, right? So strength, pullback, failure, all of a sudden we're going back to retest that range high. Strength, pullback, strength. Yeah, now nobody's going to mess with that to the buy side. Now we can safely be a seller, right, on the way back down. And again, as I mentioned on the S&P, there's a big juicy target waiting for those bears tomorrow. Because if you recall, yesterday was a pretty strong bull day. If the bulls walk away from this, we get some easy targets waiting down there at 67.53 area, right, for those bears tomorrow. So we're going to see what we can do with that tomorrow. Who knows, right? But right now, the buyers have control. We know the plan for up. We know the plan for down. We get the plan for sideways. We're pretty much doing nothing if it goes sideways here right now. We got to wait patiently here for this to pull back, or break higher here in the short term. And then from range bound markets, right, the crude oil, the E-minis, they're pretty much range bound. Here we have a nice strong move higher here today on the gold. Now gold is bullish with a strong move higher in today's session, trading at the high of a large bull channel. Now the bull channel, if I zoom out a little bit further here, the bull channel tells me to wait for price to rotate back down to these lows. But the sheer strength of this move higher tells me we may not get that deep of a pullback. So I'm looking for buying opportunities after a two-legged pullback down into really any of these support levels that I can get my hands on here for tomorrow. So as you can see, I've got this big measured move lined up, right? That big measured move has a good target up there at that 43.7. I also have, right, a prior swing high lining up there. So that's a good spot there, right, for a good target on those bulls. At the same time, right, we had that bull spike and channel, right, as you recall, that bull spike and channel, which we talked about in last night's newsletter. This, of course, now being a strong run higher. So we got a retest of its highs. Nice, big, strong move higher today. And as I always remind you, right, one of the most important things is that anytime we see a strong move in one direction, I'm always looking for that two-legged pullback down to a support level and a retest of that high. So knowing that, and you're going to see a good example of this on the euro as well, so stick around for that in a few moments. But anytime you see a real strong move in one direction, you're probably going to get a retest of that high. Now, maybe they do that in the short term here overnight, you know, relatively low volume. It's kind of midnight for the markets right now, right, as we go through the opening bell in Asia in a few minutes here. As you can see, I'm recording this video a little bit earlier than I normally do. And by the way, I'm trying to get this newsletter out a little bit earlier each day. As you can imagine, I've got thousands of clients all over the world, so I do a lot of work with them all afternoon, so I try to get to this as quickly as I can. I'm going to try to get this out to you guys as early as possible here, obviously, but I have been reworking my schedule in the office, trying to get a little more time earlier in the day to work on this and get this out to you earlier. So hopefully I can continue this new routine going forward for the rest of the week and hopefully make that kind of automatic here for me the rest of the year. Bottom line, though, is back on track. Anytime we have a strong move going higher, again, two-legged pullback, right, and get that move going back up to retest the high. So again, we have this large bull channel, right? That large bull channel, I would love to get back down to the low of that bull channel. I mean, that would be ideal, right? That would be ideal. But the strength of this move, it's probably not going to pull back all the way. So I've got really any of these levels of support, right? That swing at 33.4, the swing at 31 even, the beautiful reversal line here at 28.9. All of this really could be considered, right, your battle zone just because of the sheer strength, right, of that move higher. I like to be a little more specific than that with my battle zone for you guys. But again, it's all because of the nature, the kind of the personality, right, of this move higher. So let's do this. What if price goes up? What if price goes down, right? What if price goes sideways here? First of all, big strong move, right? Price goes down, one leg, two leg, right? Two-legged pullback, moving average comes over. You know the drill on this one, right? Failure at the moving average, strength when those stops get run. Strength tells the buyers, giddy up, let's get on, right? And of course, they look to buy, right, that pullback, right? Failure in a strength in the pullback and a retest up to that high. Say it with me, right? Two-legged pullback, failure, strength in the pullback and a pullback back to retest that high, right? This is that over and over and over and over again. I mean, you see it back here, right? Pullback. Two-legged pullback, right? Failure at the moving average, strength in the pullback, and retest that high, right? I mean, I can give you example after example after example of this. It's not just gold. It doesn't require indicators, and it really doesn't require a lot of experience either. If you have someone like me pointing it out to you, right, you'll know what you're looking for, and you're probably not going to find it in any trading books either, right? Because this is stuff that nobody wants to share with the world, and I of course, the one putting on YouTube right now. So the bottom line is, I want to see it pull back, failure, strength, right, and then back up to retest the high. Next thing would be, right, what if we go sideways? There's a really good chance that when I wake up tomorrow morning, we've already retested that high. And if we retest the high and we don't go to a new higher high, right, so watch out for kind of a double top, right, at the high. So if we make a retest that high, again, I didn't say we're going to go through the high. I just said the odds are really good. We get a two-legged pullback and a retest of that high, right? That's what we know, right? The odds are very good for. So if we do go back to retest the high, we pull back off that high. Now this becomes a trading range, right? It's literally the same as we have on the E-minis and the oil, right? So now at that point, one try, two try, you got it, right? Failure, strength, pull back, right, and retest the high again. It's just same, right? Same kind of pattern structure. It's just a little bit different location that we go looking for it. If we keep going higher, right, so we pull back, we kind of run higher here, we're making new highs, watch out for this as a spike in channel, right? So watch out for this as a spike in channel. So if we go up and make a new high here, guys, if you're lucky enough to be trading early in the session, I live on the west coast of the U.S. So for me, I'm a little bit restricted to that, U.S., basically the U.S. session. If you're on the east coast of the U.S., you can get to it early in the day, or if you're in Europe, right, or in Asia, right, you see that high, a new high there, right? Take those, right, take that new high, copy it right up, right? So if we end up going back to that high and we're not double topping, right? No double top, we make a new higher high, then you know it's on, right? Now, buying the low of that channel, buying that trap low, right? So those are the two spots I'm looking for right here for tomorrow, right? Buying the low of that channel, okay, that's always a pretty easy, pretty reliable trade, and then buying that little trap right below that move because you don't want to be buying into that measured move. Remember, anytime, right, anytime you have a measured move or any real level of resistance in the way, anytime the only option is to buy high, I always want to make sure I look for traps, right? So rather than buying high, look for traps, right? So up, down, sideways, we got that plan all ready to go here. How do we turn bearish? it's going to be a little bit tough to turn bearish here. It definitely is, right? It definitely is. We have this reversal line down here, the low of this channel. I mean, even if you go to a time-based chart right now, I think everybody pretty much knows where this channel is, right? Even if you go grab like a 60-minute or a 30-minute, I mean, it's pretty obvious you got a big bull channel here. So we're going to have to get through that low and then really run if we're going to get a chance, right, to get this thing bearish. So what might happen is we might see it go down and really get some strength going lower. That'll be a good start, but again, we may easily stall and then strength, pull back, and go right back up again down to the low of that channel. So I think the most important thing is going to be, first of all, strength going lower. Second of all, show me that you're going to hold either the underbelly of that channel, but get me below that channel low, and then show me you mean business. Once we get that, then I can start looking for my new channel. And and believe me, right? Believe me, I don't want to have to wait that long to be a seller, right? But the reality is that I'm assuming you're going to see a lot of buyers here that kind of make this a difficult spot to break through. Untested reversal line, low of that channel. I want to get through it and then use that, right? And then go short from there, right? That'll be a lot more reliable, right, than trying to predict that breakdown below that channel. All right, guys, we got up, we got down, we got sideways, and we even tossed in a reversal for tomorrow. Now all we need to do is wait for it. Now the euro looks very similar to gold, but there's one big difference, right? The euro has a range going sideways now. So euro's definitely bullish, right? We're right at the high of this channel, which I'll show you guys in a second here. Let me get this zoomed out here for us. There we go, right? So of course, big strong, right? Big strong move up, pulls back, new high, draw those two off the highs. This is called a spiking channel. This is just a little bit larger picture of it. And so now I know I want to be a buyer, right, down at the low of that, right, of that channel. On top of that though, right, you'll notice it's what a cute little spike in range here, right? Isn't that a little well behaved, right? Nice little spike in range. You might also call that a head and shoulders. Right? Now, I don't trade head and shoulders in terms of reversals. I like head and shoulders because they oftentimes get rookie traders into the market. And I know that rookie traders use very tight stops. I know that they use very short-term time frames, and they probably won't be aware of that potential failure of strength and pullback, right, going back up again. So, no, I don't like trading head and shoulders patterns, but I do like it when other traders use head and shoulders patterns, right, to go against the trend, right? So I get that question all the time. Joe, how do you use a head and shoulders pattern? And here's a good rule of thumb. Any pattern you can read in a book right now, you want to be really careful with using on really any market right now. And I realize, penny stocks, Bitcoin, things like that. These are illiquid, kind of, uncharted territory. They may work on that. But for all the real markets out there with liquidity, lots of volume in it, professional traders, they know these tricks. They know that rookies, they pick up their first trading book, they learn about, right? They learn about the head and shoulders pattern, right? I know that the 10-year-ago me, right, will be trying to sell this head and shoulders pattern, right? The 10-year later me, right, knows that there's a support level waiting right down here. So you know what I'm going to do, right? I'm going to try to be a buyer into that failure because that momentum will drag this market, right? Drag that market going higher, right? So feel free to keep trying to use these head and shoulders patterns. Just make sure you do it with the trend, right? This would be an example of going against the trend. No. Very, very unreliable pattern. You might get a few ticks out of it, right? But guys like me, professionals, are going to be waiting there, right, to buy right into that failure. You can see a good example of it right back here, right? So we go up, down, up, right, pulls back, and then, of course, right, just when sellers are getting on that head and shoulders, right, buyers are loading up the gun, right, to blast higher as well. So two big components, right, whether you want to call it a head and shoulders or you want to call it a trading range. I look at it as a trading range, right? 2-try rule below that range, right? I love to incorporate the reversal line. So now we know, right, where we want to be buying. I want to be buying down at that low, right? 2-try rule, failure strength, right? And pull back, going back up, right, to retest that high. Then from there, right? Then from there, if we go higher, right? Let's just say, for example, we keep going higher here, right? Let's just say, for example here, right, it isn't a range, and I'm wrong about this, right? What is it? Becomes a spike in channel. What we look for now? Yeah, trap low, right? Get that move back down below that low, right, and buy it up from there. You get that big measured move waiting to be hit, right, overhead. So, you know, like I mentioned on gold, when we see these big, strong moves, two-legged pullback and a retest of the high, if it keeps going higher, don't buy high. Keep focused on buying low, and you'll be rewarded. Same thing true for the sellers. Strength, pullback, strength, hidden channel going lower, right? And then we're given the green light, right, to sell, 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 right, going back down again. Just make sure you wait for a little more proof. All right, guys. One last thing on the euro. Thursday morning is the ECB announcement. Okay, so we get another big announcement coming from Draghi and Co. on Thursday morning. We'll talk about more of that tomorrow night. But, you know, oftentimes leading into a big announcement from the ECB, the euro sometimes can be a little bit fussy, right? So if we do end up seeing the market really sluggish, really narrow ranges, really small ATR tomorrow, just be aware, right? Just be aware that we may be seeing the markets kind of sit there, right, nice and quietly, right, ahead of that ECB announcement tomorrow. So don't force it, right? Got a good plan there for tomorrow. But again, hope you learned a lot more about how I trade the head and shoulders patterns, or should I say how I don't trade the head and shoulders patterns, right? And you can use that, right, to profit along with us tomorrow as well. Speaking of tomorrow, want to come out and join me tomorrow morning in the trade room? I got an invite for you. Grab that free trial on the homepage at schooloftrade.com. I'll put the link in the description of that YouTube video. Grab that free trial. I'll shoot you a free pass for our trade room. I'll also teach you all about the strategy we use in our trade room as part of that free trial. And then don't forget, I've got beginner, intermediate, and of course advanced levels of membership available on our website. I have a great place for you to begin your career as a brand new trader, graduate up from the beginner to the intermediate, and then join me in the trade room as an advanced member. I'll tell you right now, if you do half as well as my average client, you're going to absolutely love your results with our beginner, intermediate, and advanced classes. So give them a try. And if you have any questions, drop those questions in the comment section on YouTube, or hit me up on live support on the right-hand side of the website. Having a great week here so far. It's been a great month of March. Hope you guys are doing well out there as well. You got a plan. Follow that plan tomorrow. I'll see you tomorrow morning at 8 o'clock Eastern Time in the trade room. If not, same time, same place tomorrow night on our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.